Alright, hello guys, and glad to have you on board again. Today we're going to add another education video in here talking about the FLR network. Just because, of course, if you have missed that information a few hours from now, it's basically going to be later tonight at midnight UTC, that the token distribution event, which is, well, something that some people have been waiting for a long time, is actually finally going to happen. So TLDR in here, just a bit of a background for the story of FLR Network. This project has been basically in the pipeline for 2 years or more. The actual snapshot lasts on the 20th or 21st of December 2020. So this is basically 2 years old snapshot on Ripple network, which is basically nothing too much related to FLR. I mean, there are kind of weird stories out there. I don't really get the whole point. So still, what FLR is trying to do today has not so much to do with Ripple, at least not from what I understood. So we'll see all about that. This is basically a project that has been reshaping itself, its market shares and direction multiple times across those 2 years. So to me, I had to put it simply, it was pure and simply the kind of project that I've heard too much about. Like, really, basically, you're trying to do too many things and you can't focus on one thing that you're better than others at doing, and you're hardly going to be market fit. In the end, you're just going to release a project which is basically either coming at the market too late or just trying to be too ambitious and will never actually be able to deliver on the promises. So this is where I've always seen FLR, and I was basically, without doing too much research, thinking, well, if this thing ever goes to market, I'm just going to dump the free money and move to something else. So basically, I have changed my mind. Headed into that airdrop, I had to do my at least standing ground of research. And what came out of this was kind of actually at least interesting, and it's the reason why I wanted to record something today. So not trying to convince you into getting into this project any other way or form, but the thing is that if you ever had the same idea as I did, like basically, well, finally I'm going to get free money, that's cool, we're on the bottom of a bear market, so I could be able to buy some other things with it. I think it might worth eventually just listening to a few arguments and eventually doing some more of your own research if I caught your interest on that one. So first and foremost, what the FLR network is, I think, is the first question we need to answer. I would be too stupid to say I got it all, but to be honest, I think I still get where this project has the highest chance to be market fit. There are many things that this project pretended to do. Still right now on its upcoming release, they're trying to do too many things. So I'll just be as brief as possible in here. I hate projects that pretend to do like we connect everything or we do all of it. Anyone will only need just us. We don't need anything else. Pure absolute BS. I've always made it clear, blockchain technology is about fragmenting markets, not making one project that does it all. Anybody who's just pretending to do this is just full of shit. So basically, that's why I hated this project's communication so far, because it's basically actually their narrative, like connecting everything. I was like, oh fuck, not that anymore. It's too late. We've seen the shit with bridging technology all across 2021. We don't in 2022. We don't need that anymore. So we actually need to figure out a solution to stop talking about bridging technology, because bridges will always have a trust assumption. There's no way it can't be otherwise. Though the thing is, we need to understand what that trust assumption is, and there are multiple approaches of this. If you want a fast, trustless bridge with instant finality or close to instant finality, well, basically there's always going to be a security trust assumption depending on the blockchain A connecting to blockchain B. If two have kind of similar types of security, then in that perspective, there's not that much risk in the process. Where the problem is that not all blockchains have same security. There are different trade-offs for different types of technologies, and basically making this fit from blockchain A to blockchain B with totally different technologies is definitely a complicated stuff, and people try to market it as being easy where it's not. And what we've seen is basically whoever's been marketing stupidly has been actually hacked afterwards, ending up with millions of dollars of losses of clients' funds being bridged. So basically, we don't want to go down this path again. All right, sorry. So basically, connecting everything with a bridging technology is interesting, but, well, I still really worry about the trade-offs. Most importantly, when I look at what this blockchain is going to have in its belly. The thing is that basically it will integrate an EVM, so you know what I think about that. Anybody trying to run an EVM on a different ecosystem better has to sell something smart. Otherwise, if it's just a suck up on Ethereum's money, pretending to be an Ethereum killer, once again, 2022 has put a very hard stop on whoever tried to do this. So basically, I don't think it's a road to go down to, but we'll see why they're willing to get that EVM. It's not necessarily to be an Ethereum killer. Though we'll see, it's not necessarily a bad stuff in here, but I don't think this is where this project will market fit anyway. Despite that, what we need to understand is that this project will run an avalanche consensus mechanism, which is basically the thing that is in AVAX. Had a lot of conversation about that consensus. Some people pretended it was revolutionary and the future of everything and BS like that. Though basically, I've always said, when we talk about blockchain and we talk about tokens and stuff like that, we talk about how the hell this consensus is put into motion in an economic framework, which is, of course, what was a big no-no on my end for AVAX. Basically, yes, the avalanche consensus is great, but the way it's been used with the absolutely outrageously badly diluted avalanche supply meant basically, yes, the VCs were going to dump on the heads of retails, and I knew that on day one, and well, that's exactly what happened. The problem was the tokens dilution in here, though basically now that the token supply will be redistributed, eventually AVAX has a chance to succeed. Though in here, I would like to state that the avalanche consensus, just all by itself, is very interesting in terms of trade-offs that it makes. It offers quite some significant things that others can't, while of course introducing some trade-offs. Though let's talk a bit about that, where I think avalanche consensus can be market fit. Well, the avalanche consensus, TLDR for those who don't know too much, though I'm making a lot of shortcuts here, don't be dumb enough to go look for the details, but here is what people need to know. AVAX is basically a consensus that offers two things, though it's not it's not mandatory, but that's the way it's likely implementing in here as well, is that it is a probabilistic consensus, which is basically having subsampling stuff, which promotes high throughputs and a very large number of market participants. So AVAX consensus was defined that way. I think that FLR network will be on that way as well, meaning that it works damn great if there is a whole lot of participants or nodes. The higher number of nodes, the more secure the overall protocol consensus is. It is and will be a probabilistic consensus, which means the actual truth can only be reached after a certain numbers of waves have been passed in the entire subsampling system, which means basically avalanche consensus cannot provide an instant finality. It's a variable finality. We consider the truth to be true after a few passes of the consensus, because basically the early response we have is just no more than okay, it might be right, we don't know yet, let's just keep doing this thing over and over again, and as long as we do get positive feedback, that convince us that the truth is the truth. But basically there's no truth, which is totally different from instant finality consensus stuff like we've got in Cosmos stuff, or soon we're going to get in the Ethereum consensus as well. So totally different stuff. There is a major trade-off in here. Instant finality and probabilistic consensus is totally different way of doing things. One has a much larger ability of node participation, because you don't have to talk with each node, you just propagate what you've heard and think it's true. And in the end, it becomes the truth when when the large majority of people do it. But when there are controversy kind of blocks, well, this is where it gets tricky. You don't know the truth, and you're going to have to subsample multiple times until you eventually get a probability that, well, it's going to be the truth. But that's a big problem, because it depends on the stakes that are here, because AVAX consensus was basically using AVAX blockchain was using the avalanche consensus to run the consensus without slashing. And I think FLR network will do exactly the same. So we'll see all about that, but if it is that way, then I think it's smart, because that's very cool. But that introduces a significant trade-off. In that perspective, that means you don't have a truth. You have an guesstimate of the truth that turns to be 99.9999999%, though it's clearly 100% after a few seconds. As long as you can run so many subsamples, the closer you get to 100%, but it's not 100%. On the opposite, of course, you can have instant finality, but that requires the ability to slash whoever has cheated on that instant finality, though there has to be a security collateral. Though in here, I think the use of Avalanche tells me that this project intends to use a non-slashing consensus participation, just like AVAX, which is one good thing, but it creates a trade-off. That means basically the information that will be transiting on that blockchain, if it is sensitive enough, cannot be used as such until there are multiple blocks validating it. Okay, so that's one very important thing. We understand and going to go back to this later. Though what this thing is intending to do is the first two stuff in here, F assets and layer cake, are basically using bridging technology. Though, like I said, using bridging technology with Avalanche has kind of trade-offs, meaning that I don't know, but there are so many people who are willing to gamble today at the casino for a 0.00001% chance to win, if that is winning hundreds of millions of dollars. Well, that's exactly the same thing. 99.99999% chances isn't 100, and if some malicious actors are willing to propagate false truth, well, they can still try to do it for a limited amount of time, but that's still a limited amount of time that can do several damage on a market that's willing to go faster and faster at all times. So basically, there will be trust assumptions in the process of propagating truth, and the more critically sensitive that truth is, meaning high fucking collateral value, the more dangerous these trust assumptions are, specifically when it comes to multi-chain bridging technology. So I'm really curious to see how they will implement that, but to be honest, I don't think their bridging technology is going to be used for high collateral, high staked value type of information transiting. But they're offering kind of a plug and play technology, which is, and I would like to see about that, kind of connecting multiple blockchain type of consensus and states and stuff like that. And they're offering kind of a secure bridging technology. With that secure bridging technology, they're intending to use their EVM to use to add up smart contract functionalities on blockchains that don't have it, like Ripple, Doge, Bitcoin, Litecoin. But of course, that requires bridging your assets as F asset, like F Ripple, F Doge, F Bitcoin, F Litecoin, in which you'll be able to run an EVM type of smart contractualization. So interesting, but like I said, I don't think there is any market share available out there. Basically, Ethereum does it already. And there's no way it can be better, or for low value transactions. Basically, people doing it for tens of dollars will eventually do it out there because it's cheaper, but anybody with larger sums will basically stick to Ethereum layer 1 or eventually layer 2, but this is basically where the trust assumptions are minimal just because the security is higher. Though I don't think this bridging technology is the piece of cake in here, the cherry is something else. We'll see. Last but not least, the last but not least will be the relay, which we're going to keep for later. Though in here, comparing FLR to Ethereum, like we said, using the EVM, I don't think it's going to be to bridge the same old fucking DeFi stuff and stuff like that to have the 100th copy of Uniswap on another blockchain. Gosh, we've seen so many of them. It's just not working. Okay, so the thing is that I think FLR is using the EVM, but for this smart contract functionality, which I think has been designed initially for Ripple, but that probably have been like a couple of years ago, and I think the market has tremendously matured until then. And I personally think, well, that was a waste of time to focus on this. Could eventually be some smart thing to happen, and I got them like the EVM compatibility because, I mean, Solidity kind of became the standard. So having EVM to run on that chain is good because that means the same old language standard will run in that chain as well, and Solidity coders will be able to build on that chain without too much technical hassle. So I like that on that front. I think this is good to have the EVM running in this, but I doubt it will be for the same old stupid ETH killer purposes. And at least I think they're smart enough not to play that card, because if they do, I'm going to sell that crap very quickly. Though where I think there could be definitely market fit is on the relay. and I goddamn like it. It doesn't relate any such a thing as the Polkadot relay chain or whatsoever. I'm just going to go in here, TLDR. But this is where you need to understand. They're willing to use relay as a kind of interchain Oracle service, which they call the FTSO, which stands for FLR Time Series Oracle. I sincerely invite you to look at this to understand how it actually works. Though what I like with these FTSO stuff is that it's in direct competition, if you've seen the video with Chainlink, with the Chainlink CCIP, which is kind of a cross-chain interoperability protocol doped with Oracle systematic execution in between. So basically offering Chainlink as a Chainlink Oracle data to run cross-chain execution, which we've seen is definitely interesting in the future, and there are definitely market shares for this. But FTSO, I think, is doing the same thing, and it's actually going to do it better. So this is where I think FLR actually stands. If there is market share for this project, I think it's exactly there. Using this Avalanche bridge technology for low collateral, low value data, which I think we're headed into much more transactions being processed that way in the future, because if we're headed into Web3, or if we start to get into the data layer and trying to decentralize data sharing, then in that perspective, well, it's not just about sending millions or using million-dollar collateralized smart contracts, which will, and I think never change, but to stand in Ethereum. So these high-value transactions, in which, of course, high margins can be extracted very quickly and easily, I think this stands in Ethereum. I've always said Ethereum is the value extractor because this is where there is the likeliest higher standards of security. That, of course, is the trade-off that no smart money manager will ever make. If you have big money to transact or whatever, the first number one priority is the security. So being fast and whatever, it has never made it for high value transaction. So this is really the way it is. But where there is an interesting synergy between the FTSO and kind of FLR network, high throughputs, probabilistic consensus, but like we said, multiple participants. A lot of people can participate in Avalanche consensus because you don't have to speak with the other nodes entirely. You subsample to get the truth from others and see if it's the same as yours. And basically you propagate. This is why I like the Avalanche consensus to be called gossip kind of consensus. This is more like, okay, I think this thing is true and I'm going to sample other people to know, subsample other people to actually know if this truth is really truth. And that's really the way it is. As you think you've seen enough, you will consider this as being the truth. It's not necessarily is, but at least this is what you will consider the truth because the people you've sampled to figure it out are kind of trust people. Though this is really the way it is, totally different from an Ethereum consensus, which is basically I look at the ledger and I know it's true. Because there are all the trust assumptions that have been removed with cryptographic proofs. So this is definitely not the same thing, okay? Very, very different. But I think both have advantages. The first one is tremendous higher transaction throughput in terms of using the Avalanche consensus, much more consensus participation as you can just propagate and you can be in and out of the consensus without problem. The consensus still runs as long as there are sufficiently enough people to run it, but you don't have to be 100% online, which is pretty damn great because if we're talking about data, well, basically you and I could be relayers of Avalanche consensus on our smartphones or whatever when we're using applications. We could be relayers just for the time of using the application without nearly knowing it. It would just be using a bit of our bandwidth and CPU while still participating in propagating the actual truth, which is very, very interesting. And I think data layer transaction type will definitely end up in Avalanche type of consensus. Though, like we stated, we can extract very little value from each and every one of these transactions because basically to have a secure transaction, a data transaction layer, well, who would be able to pay? Well, you don't want. That means the data must be processed some way and create some value at some point, but this is just like the big data can make a shitload of money out of a tremendous amount of data, but hardly can extract value from a single piece of data, exactly the way it is. I think in here, there is some money to make, but of course, the higher margins will be on high value information. Though if we talk about information, just like transactions, there are high value information, lower value information. And I think the lower value information will transact in the FLR network using this FTSO stuff, where on the other hand, the high value transactions and information and data processing will happen in Chainlink for the simple reason that what is it that Chainlink has that the FLR network doesn't? Well, the security collateral. If you cheat on Chainlink, you're gonna be slashed for very valuable link tokens, where this won't be the case on FLR. But the thing is that I think 90% plus transactions might actually occur on the FLR network against just 10% occurring in the Chainlink network. But like we stated, it's all about how much value you can extract from single transactions to have a sustainable business model. I think both will have to exist in parallel, because we certainly need more scalable solutions for lower end value type of transaction type, but we still need a high collateralized security system of instant finality for crucial data that needs to be processed quickly with high collateral value associated with it. Basically, like we said, cheat on the price of one asset, and by the second afterwards, there has to be collateral damage on different DeFi architecture stuff or whatever. So this is crucial type of data that can have endlessly complex replications afterwards. And these data, I think, just can't happen with non-collateralized truth. I would never run a DeFi app using something that has gone through an avalanche consensus, or I will wait for several seconds before considering the truth is, well, potentially truth. Because until then, I would never, ever take down stop losses of whoever or try to handle liquidation on assumptions of the truth, be it 99.9999999%. Okay? It's really important for you to understand that. Though, if you understand this synergy, understand that we need this one to actually tremendously multiply the actual throughput and to actually put it off the chest of Chainlink, which will focus on doing what it does best, handling the higher sensitive information, and on the other hand, having lots of other less important data transacting through more avalanche run type of Oracle services. And this is where the multi-chain bridging stuff could actually also be very interesting. Because, well, if it is propagating random stuff or random data, I would still like to have reduced trust assumption close to zero. I don't necessarily need instant finality or instant truth with billions of dollars of collateral at stake. I just need that information to be processed with cryptographic proofs that are significantly good enough for me to trust it. That's always going to be better than the data handled by Facebook in a centralized manner. Though that's really the way it is. I think there is tremendous flow of data to happen with FLR network. And as they are cross-chain, if their bridging technology is as good as it is, meaning that the trust assumptions are not that dangerous, well, for low-value data transactions, they're definitely have a market fit. And that's the reason why I was really interested in understanding this and say, well, I will get that airdrop, but I won't dump it. The other thing is that if you eventually thought about dumping it, I hope you had a look at the tokenomics, because, well, to put it mildly and simply, the thing is that you will receive 15% of your airdrop initially, and then you will receive the subsequent remaining 85% on a 3% per month. So this is basically something like a 3-year cliff or so, approximately. So you will understand that thing, and you will get 3% each month afterwards and onward. But the thing is, if you dump your initial airdrop, well, you're probably not going to get the remaining 85%. The reason is, of course, I like these guys because they're not dumb. They really, really have taken a snapshot like 2 years ago. They have to come up with a promise. They said, okay, you're going to get this. So they just can't change and say, okay, afterwards we decided to change the snapshot. No, they will keep on their promises and deliver. But they, of course, understand that, like, personally, I no longer hold Ripple today. So I will get that airdrop, but the portfolio I have today is significantly different from what it was 2 years ago. And in that reason, the alignment is totally different as well. I think back then that was a chain that was supposed to have deep down links with the Ripple ecosystem, reason why the snapshot was made on this chain, but I think today isn't. If it is really the market share that we've highlighted, well, it's nothing related to Ripple. I think most of its market share is actually to be a decentralized oracle to compete and synergetically with Chainlink. So if that's where it's headed, well, who gives a fuck about Ripple in that mess? So that's really a smart way to understand that the actual token distribution and the airdrop specifically is mistargeted, because the project has evolved since then and things have to evolve as well. So this is why they're making very, very significant changes and you need to have a look at this. This is the first FLR improvement proposal, FIP1, which is basically detailed in an entire blog article with absolutely crucial type of data. I mean, for those who've listened to me for a long time, you know I'm a math guy. Even though I don't show the math on screen, I do run math as much as I can. At least when I have doubts, I run the math to actually fulfill the stuff. But, well, I trust math more than anything else. And what I like with these guys is that they've put in a hell lot of work to provide all the math backing their decisions. And, well, I'm also a guy of balance, which means I instantly see if they're balanced or not, if the things are properly done and handled. And gosh, I wish I could have found a single flaw in this thing. But if I had to advise these guys to do kind of rework the airdrop in a much more sustainable way and much better distribution, I would exactly have done that. Like really, to be honest. It's a perfect job, I guess. They had to come up for a problem of probably a disproportionate or bad distribution on the airdrop, which means lots of people would have dumped and so on. And that would have been bringing a constant sell pressure at the release. And of course they knew it. I mean, that would be very dumb not to assess that. Though the solution that they came up with is very smart. Though I sincerely invite you to have a look at all of it, because it would take 1 hour long video to actually review all of this. But trust me on that one. I mean, running math and knowing how to balance stuff is definitely my fucking job. And they have done a tremendous job doing it. Well, if you have the time, look for yourself and verify. But the TLDR, things you need to know is that now, if you sell the 15%, all of the remaining subsequent airdrops, 3% per month, will be linked to the initial token you sold, which means basically the person who bought your token will get the airdrop afterwards. So this is basically the way this thing will significantly change. Okay, so that means anybody who's been obtaining tokens via the other means will have to be able to buy them and have the subsequent airdrop as well. So if you clean up the 15% you get by selling it on the market, you're not going to get any of the remaining 85%. The person who get that token will. Okay, so that's really the way it is. It's much more interesting in that form because there will probably be a bit of turnover at the airdrop, around the airdrop, which will basically be, well, people will buy, sell, or whatever, because I think there are always going to be people who don't make their research. It's just, well, free cash, cool, I'm going to sell. Though I think there's demand for that project. Like I said, there is market fit, and I don't see that very often. There's many projects popping every month. This one, I think, has a clear high-value market share if it can go into that direction, which I think they will. And if that's the case, well, then reforming and reshaping that airdrop into a much more balanced manner is the way it is. Though that still means, anyhow and anyway, if you're willing to hold a token, you need to know what about the token distribution. So this is really important to figure that one out, okay? There is really, I like the way this thing has been done. The tokenomics itself, you know, I'm advisor for some projects, specifically in Cosmos, to help them design their tokenomics the best possible way to get and strike balance. But basically this one as well, I like the balance. I like the way inflation is processed and stuff like that. This is really smart. Though I'm going to give you the TLDR in here to just look at the chart. So this is the way it is, okay? You have to understand that there is, of course, inflation in the early stages, but it's really not that bad. What is in here, have a look at this, okay? Look at all the charts, look at all the data. It isn't that bad. I don't have time to fully run all the things. I'll just go switching to the most important part, which is this one. Yeah, basically I was already in here. So the thing is that you need to figure out whatever inflation is and how is the initial genesis circulating supply actually being. So the airdrop represents 35%, okay, of the actual tokens in circulation at month 0. Okay, this is very important for you to understand. The FLR Foundation still holds 16% and the VC fund 12.5%. So this is basically how they can make sure that they still have a significant control over the network on its early stages, which is exactly what every project does today. Most importantly, that's the critic that I would have with these guys, to say, well, at least I like the fact that it's 100% assumed. They're actually communicating around that they're willing to be partially centralized in the early stages to at least make sure that if there's a problem, they can come up quick for it. So this is basically to avoid exploits on bridges and stuff like that, which I think on that front is a good point. So there are tremendous market shares that still remains in the hands of the teams and the foundations, more or less. So basically, we have a very limited talk in that discussion in the early stages, which also leads me to believe that they have decided to put themselves out of the vote for FIP1. Okay, so this is basically, if FIP1 is rejected, this is what it will look like, okay? With FIP in, let me just figure that one out. Okay, let me just find it. All right, that's this one. Because on the FIP1, there's not just that thing about just not delivering on the rest of the airdrop if you sell. It's, of course, as well, they're going to use incentive mechanisms as the airdrop, which means basically you get airdrop tokens, and if you use the chain, so what I like, it's to make sure that the money goes to those who use the protocols and the chain. There will be a lot of incentives. So basically, if you stake, you're going to get rewards. Staking in here, like we said, is probably not meant to be a collateral stuff, but it is at least being eligible for those rewards, which is kind of very similar to classical way of staking, which basically you put your tokens out of circulating supply and you get rewarded with incentives. So that's one way. There are going to be multiple of these incentives, but the early ones are going to be pretty much staking like. So you immobilize your tokens, put them out of circulation to show your conviction and commitment to longer term goals. And basically you get rewarded for this. Though very good point of it. So basically maintain it that way. What FIP1 is doing in many smart ways exactly this, making sure that the tokens goes in the hands of those who care instead of those who will dump in the beginning because free money. So you still have 15% available to dump if you're willing to do it. That also includes the fact that you can sell and buy again later. But once again, there is an assumption on this. Though, have a look at this. This is exactly showed in the FIP. So if you sell to buy later and to rebuy the same amount of token, it's not going to be the same as if you kept the first ones, okay? It's not the same. They're not dumb. They don't want you to arbitrage prices on the first minutes to basically just sell your airdrop to buy it again, okay? If you sell and buy, you're not going to get the same share of the rewards afterwards. So have a look at the whole detail in here. TLDR is, I can now understand what the market share for this project is. Do I think this project will still be there years from now? Yes, I definitely think it will. The thing is, it has to go in market shares, and to find its market shares where I think there is market fit. Where I think there is certainly not bringing smart contracts to Bitcoin. It's a full of shit narrative. Bitcoin has to be Bitcoin and nothing else. Bitcoin doesn't have to move because that's what a store of value is. A store of value doesn't move. It's just like, are you and I paying with gold coins? Fuck no. So that's exactly the way it is. Bitcoin doesn't have to move and it doesn't require smart contracts. It's really the way it is. It's just going to bring trust assumptions between a highly secure Bitcoin consensus and a lower security probabilistic stuff. No true value will ever happen in there. Of course, if you want to transact for a few dollars, maybe that will be the case, but you certainly not make a market for this because there's not going to be enough margins to take out of. But instead, filling the blocks with tremendous amounts of transactions with low interests and low collateral value is the way I think blocks can be filled on this blockchain. That will attract a lot of people to actually use applications and cross-chain stuff. In here, I see a lot of applications that can make use of these cross-chain Oracle services That's exactly the same study that I've made back then with the CCIP of Chainlink. But I think this tech is more suited for high transactions throughput, of course, to the assumption that it will be less valuable or less sensitive data type of transactions that will occur on this network. But the thing is that this is still a transaction that will have to pay a fee, a very small fee, but of course, if you take millions of transactions, it's of course starting to pile up some gains. So I think this is economically viable if we head into that direction. It has to combine two things. This bridging multi-chain stuff technology has to be very good. The trust assumptions need to be very low. But there will still be some trust assumptions. It's always guaranteed, okay? Though I'd like to know more about that, and I couldn't figure out all the details, so I'd like to be just honest with you guys in here. It's really too complex for me to understand. The thing is, on the second hand, this Oracle FTSO stuff is very goddamn smart. You have all the data in here, and I sincerely invite you to dig deeper into this if you have the time for it. But at least today, I wanted to just gather the basic information and at least catch your interest on this. If you're eligible for the airdrop, meaning you were holding ripples in December 2020, then basically you receive on a one-to-one, which is basically the amount of your total airdrop is exactly equal or almost exactly equal to the ones you had on Ripple. So if you had 10,000 ripples back then, you're going to get 10,000 FLR network airdrop claim through almost 3 years, okay? So 3% cliffs per month and 15% initial liquid available for. Though basically remember that in order to get the 85% remaining, you're going to have to stake the amount you hold. Though this is not staking, you're going to have to wrap your tokens. This is going to be wrapped flares, which is going to get you eligible to remain and retain the 3% cliffs down the line each and every month. So that's it, guys. And of course, you're going to be able to take on the cross-chain incentives and stuff like that, and take on a share of inflation, of course. Okay, so you have the 36-month circulating FLR supply, which is basically where you will be. Okay, if you still hold every bit of token that is delivered to you, and meaning you don't sell anything, you're going to take a portion of cross-chain incentives, which will be diluted over time, and you will have inflation as a reserve, which will be sent to you on a portion. So all the details in here on how inflation is actually split is in the detail in here as well. So have a look at all of it. But like I said, it's a very smart way of doing things. If you run the math, you'll see that actually not a single of the cohorts actually get to take over on the other, which means as long as you held the tokens that you've been given, your portion, meaning your global overall share of the circulating supply, kind of remains absolutely standard. There's just one little bit of problem when it's in here. At 18 months, there were going to be a cliff introducing foundation team tokens. But despite that, this is the only moment over 18 months in which your relative share of the token supply will be slightly diluted by the founding team. But despite that, that's pretty much almost linear, which is very good because that's not something easy to strike. And of course, in here, we were on very long vesting cliffs on that matter. Though this is just, if I had to give a negative feedback, a single one, if there's one thing that I think wasn't balanced, it's that one, because there's going to be a significant cliff in here. So that's going to be all about it. I'm going to leave you guys with that. So do your own research, just scratching the surface in here to at least get your interest. I wish I had more time to do a full review, but I just can't. So that's enough for today. You decide, do your own research, and if you're willing to buy the tokens for whoever is going to drop them, have a look at the FIP to understand how the eligible wrapped rewards will be distributed to you onwards. That being said, I wish you guys a pleasant day, a pleasant airdrop if you're lucky enough to get some, and otherwise, if you're willing to invest, do your own fucking research.